Good morning. This is SME Unleashed, another episode. My name is Dr. Edwin Obonyo from Strathmore Center for Value Investing.
And I'm Robert Yawe from Strathmore Institute.
Today we are just going to talk by ourselves, the two of us. Robert, they're saying the conversation is just the two of us, isn't it?
But our conversation every Thursday is the two of us. And it's been like that for the last 2.5 years.
No, we've had guests.
When? Not only on the podcast, but we generally have our weekly meeting. So we just moved our weekly meeting to the podcast.
Yeah, so today apparently we'll just be talking, me and Robert. And that is to discuss our journey so far. We've done 12 episodes.
Yes.
We've done a lot, isn't it, Robert?
Yes, it's been whirlwind 2 years. With your absence for 6 months in going for a sabbatical.
Yeah, sabbaticals are very important for lecturers.
What about business owners, actually? Shouldn't they be able to take a 6-month, it's called a hiatus?
Hiatus.
Okay.
Yes, they should be.
So why is it that they are not able to?
I thought that is already clear. They need to put things in place, right? To put things in place so that people can run the business whenever they are not there. I think one of our last episodes, Bonakibe said that one of the biggest reasons for fear is what? What did he say? Do you remember?
No.
Let's see. But he started talking about theft by servant.
Okay. Yes. And I told it's because they themselves steal from them. They are the biggest thieving servant.
Well, there's that.
For their businesses.
But he also said, the fear.
Yeah, you see, the fear would only be from, and this is fear based on knowledge. This is not unfounded fear. Like we said when you're saying is that they need to separate the business from themselves. So when you don't separate the two, when you assume that the business's money is your money, and at the time when you're sitting as the servant, as an employee of the business, then that is theft by servant.
Okay.
Yeah.
So that was one of our previous episodes. Last week we had a breakfast.
Yes.
For restaurant
owners and those with prospective. It was quite interesting. We actually had a young man who I think is about 24, a new chef who attended. And he asked me, is this really relevant for me? And I told him, this is most relevant for you because we will make sure that what we don't want to happen is you to pick up the bad habits of those other chefs who try to go into the restaurant business without purely understanding they were going into business like any other business. So I'll say thanks to his mother who sent him over.
Oh.
Yes. So as I was trying to pitch her.
She was there?
To come for Forge.
Okay.
Yes. So in the process of getting her to come for Forge, she sent me the son for the other program. Okay. I didn't even know the son was a chef. And you can imagine, and the mother runs a school. Okay. The parents own a school.
Yeah.
So we go back to our other issues is, when do the kids get pulled into the business?
I mean, so we already have, it's a dichotomy. Either they join or they don't. So if they don't, we should not be alarmed about it.
And I believe which is why we're trying to push the Forge agenda.
Yeah.
Yes. But the business should be able to survive either decision.
Yeah.
Whether they come into management or they're just coming into governance and ownership. So the structures should exist to deal with both scenarios.
Yeah.
Yes.
Yeah, and whether they want to be part also of governance.
So the governance just means they are board members. If they don't want to be in governance, they can still be in ownership. They can just be shareholders. Yeah. And I believe we had a talk yesterday with 300-year-old family business.
Family business.
And he said, I think currently the CEO is the one who is a family member.
No, 20 are inside.
Yes, and the CFO is not.
Yeah, CFO is not.
He himself is just he's technical director or manager.
Yeah.
Yes.
And 880 aren't in the business.
Exactly. But they are still part of the business in terms of ownership. And I think those different dockets are what we need to get most of our businesses to start appreciating.
Yeah.
There's a business that runs, and you could either be employed by the business or not. There's a governance side. You could sit at the board level. You could sit at the shareholder level at that point, or you could even sit as far away as possible in what Raymond loves, which is the family council and the family.
There's that 3-circle thing.
Yes.
Which says what? What does the 3 cycles say? You can be a shareholder, you're a family member, and a director, family member. So it's
You're family member and employee.
Yeah.
Family member and on family member and not an employee.
Yeah.
Yes.
But then it's also family. No, that's only 2 circles. There
What
should
2
be
circles?
3.
Family member, employee.
Yes. So, but
Either an employee, family member, or non-family member.
no, isn't it family, director, employee? Like you can be a family and a director, but not employee.
Yes. Again, to be sorted out by those who have reached that stage where there's clear separation.
Which is
But right now, it is what we unfortunately refer to as family businesses. Is a business owned by a family member.
fair enough.
Yes.
One of the highlights we got from the breakfast was knowing your customer,
Yes.
which is, do they have a way of rewarding the loyal customers? So loyalty points, or whatever way you're thinking of using the loyalty of reinforcing loyalty. But that can only be found out if you capture, which because of the day-to-day rush becomes difficult, especially over lunch hour.
But she just built it in. And I think it's not unique to the hospitality and restaurant business. We just have a culture of not wanting to collect data. It's simply that. We all have, like I say, your largest customer is called cash. Yes. But yet just to add that little component so that you can assign a certain level of income to a certain customer is not that complex, especially now when to set up a loyalty system, you just use people's phone numbers. And so long as you give me your phone number and confirm, then you're covered by all these new shenanigans of data privacy and the rest.
So how will it work? So you have my phone number and I give you cash. So you are...
Yes, then I just ask you for your phone number. I just remind you, you're in the loyalty program?
Okay.
Yes.
So
please give me your phone number also. So you give me the phone number, then that transaction is tied
to the phone number.
Yes. So that when I'm looking at sales, I can tell how much you're giving me. And therefore also means I know how much I can reward you.
Yeah.
Yes. So if maybe, and also now I know that Edwin visits us every last Thursday of the month, chances after he has been paid. And then he vanishes for the rest of the time. So how do we incentivize him to come more frequently?
Yeah.
And Nakumatt perfected this 10 years ago. But all the other, even the supermarkets, never picked it up until now when they've noted Carrefour is really pushing the same. Now I've noticed Quickmart, Naivas are now aggressively pushing their loyalty program.
Of course, the biggest thing they'll tell you, and we know, is that those are very big companies. Us, we are just small things, small companies. Now how do we even be able to do that?
This is not a chicken and egg situation. If you don't do it, you'll never grow. There's no two ways about it.
Yeah.
Because if you can't identify your customers by name, then really, you might as well be a street hawker.
Still call people that?
Yes.
I thought you changed.
But they haven't changed. The situation has not
Has
changed.
not changed.
It's exactly the same.
Okay. Then the second thing, of course, is what we had, which is management, Gen Z.
Yes, that was eye-opening.
Yeah.
Where the person was told, I'm not...
No, first, a lady said she hires manager to manage.
Manager, yes.
Yes.
Because she doesn't know how to fire.
She's afraid.
No, she doesn't know.
No, but you see with these employment laws, now it's sticky.
Yeah, so it's not fear.
She said it's that.
No, to her, she's equating an experience where the labor laws caught up with her is what's causing her fear. To eliminate the fear, all she needs is knowledge. And I think when we did, through the comma program, we had somebody who literally said that of the 8 sessions they did, the most impactful one was the one on how he can go through the process of firing an employee. And that's all. And he had the same fear.
And by the way, the lawyer we had as a guest, she told me outside the session that the court judgments are one this side, one the other side. Yes. And so
they keep alternating.
Yes.
So that they maintain.
They're having a challenge when they come to advice because they actually don't know how it will go.
So the courts are playing fair.
I don't know.
So that you don't show up assuming because you're the employee, you'll always get judgment in your favor. And if you're an employer, you always get judgment in your favor.
Yeah, but the problem becomes for them is how do you advise?
No, what you advise is don't end up in court.
Settle. That's the advice.
No, it's make sure you have everything. And it's an awareness issue. Once you employ me, do you give me a contract that clearly indicates what are the terms of termination? Because unless you have it in the contract, you can't bring it up later. And we need to stop avoiding doing things right.
It's hard. That's why they're not doing it.
It's not.
Yeah, well.
It's not. And I think that's the whole issue. When somebody assumes it's hard, they will not do it. And we're not telling you to do it overnight. And that's why we say, come back and let's go through a journey of you cleaning up. If you've been in business 10 years, 20 years, it's time to clean up. And clean up where you're doing it intentionally on your own time frame, as opposed to doing it as crisis because something has happened. And these are all the things. Tax. People only panic because the tax man has shown up. But everything that you need to do to keep compliant with the tax issues are documented. It's not that KRA wake up in the morning with new rules.
True.
We had the one of the catering levies.
Yes.
The licenses, there are 2 licenses that all restaurants must have. One is enforced by county.
Yeah.
So there's a single business permit.
Yeah.
But there's another separate permit.
Yeah.
Now, unless you picked up what you call a consolidated single business permit, and you clearly indicated that you're a restaurant, then they'll make sure that all the licenses are included.
So where do you go for that?
Again, the county knows. So when you're going to get your license, find out. Unfortunately, people go and lie.
So
when the county guy shows up, they realize your license and the business you're running are not in sync.
So we go back. When you talk about catering levy, he said that you should be able to claim something.
Yes, there are 2. There's one which is the tourism fund.
Okay.
What used to be long time called the catering levy trustee fund.
Okay.
Now, that I think is 2% of all transactions.
Okay.
Now, if you take your staff for training, you're supposed to claim.
Okay.
But you only claim if you're up to date with payments. Yes. And that's why you're told is that take your staff, send them to Italy, it'll be paid for by the
government.
By the fund, yes. Like I say, all this is about ignorance. So when somebody's saying, but if I train staff, they will leave. No, you're not paying for the training.
The government is paying.
The government is paying for the training.
So there are 2. That's one.
That's one. Now, there's a second one that popped up the other day that, interestingly, actually has been in effect for 3 years.
Yeah.
But county had not enforced it.
Okay.
So they just popped up sometime in June. And all these restaurant owners were saying, no, but I pay catering levy. They were told, no, this is a separate levy that you also need to pay to the county now. Yes. So when people started screaming, all the county guys showed them was the law. Says here are the bylaws that say you need to pay. So again, it's a case of ignorance. And I liked what Sarah said is if you walk to Kaplan.
Yeah.
And she says, and I like the fact that she even gave us a figure. Between 100 and 150,000 shillings, they can actually help you do a clean compliance audit so that you know whether you meet all the requirements to run the business you're running. It's all about ignorance. So when you don't do it, that's why every time a county inspector shows up in a premise, you will most likely end up having to bribe them because they will find something you have not complied with. Be it disposal of oils, your staff wearing gloves and nets. There are many I know. But the question becomes is that it's possible to get a checklist that allows you to meet the requirement. So you ask yourself, is 150,000 worth it? And it's not every year. Once you know your compliance requirements, then the following year, and now you can factor in those costs into your business. It's a cost of doing business. And that's when I call them hawkers and you keep telling me I should not. Because that's principally what it is. No one walks into Java to ask for any of those licenses. Why? Because they're fully compliant. And you stick them on the wall. When the guy shows up, you say, Go see the 20 licenses.
And don't come back.
Yes.
But anyway, let's go back to, we kind of digressed a bit. We were talking about, the first thing we talked about was knowing your customer. Then the second one was the management issue, which we could hear from a lot of people that the younger generation is different.
Yes. And I like the fact that you just said the younger generation.
Yeah.
I believe it's any time you have a younger generation, they will have slightly different objectives and ideals. And I liked what she said was the one fellow said, he was told, I know you're paying us above market rate, but you're not giving us enough flexibility of our time. And they were saying, would rather you pay us even less, but leave me my flexibility.
Yeah.
Which is a youthful thing over the centuries.
No, but the other gentleman in Kiswahili said we have to be friends.
Yes.
We have to be inside.
I think I liked, so it's called Abdi, yeah?
Yeah.
I think I liked Abdi's take. And I was thinking about it earlier this morning. And I realized that all he doesn't know is the name to what he does. But he actually runs a very professional business. He runs an ESOP without requiring to document an ESOP, where he said at the end of the year, he looks at his profit, he keeps 50%, he distributes 50% to his employees. That's an ESOP without the name.
Mm.
Last week, we discussed what was her name again? Jaramba, Dr. Jaramba.
Mm.
Dr. Jaramba, I believe her PhD was on.
You're the one who interviewed her.
But the one who sent her to us. She's your colleague.
She was looking at the organizational behavior in SMEs.
Yes. So what has he done? He's literally, everything she raised in her dissertation, he has implemented. Treat your staff right. Understand your staff. Be in touch with your staff. And note, he does not have those books we talk about writing. Standard operating procedures. To him, he lives the standard operating procedures. He lives the culture of treating your staff right. I like the one way he says, you have a staff member, he has bought a small piece of land, so you help him to build the house. Do you see?
But is that even possible?
Again, the minute you realize, and like he says, this is not my business, it is our business. So it's just let go of the selfishness of thinking that you and the business are inseparable. So move away separate yourself from the business. When you're inside, you behave like an employee. When you're giving terms and conditions, you're giving them like an employee. You're literally negotiating with yourself as a union on one side and the owner on the other side. It was mind-boggling, if you ask me. What he explained, how he keeps, and he said, 90% of the people he started with 10 years ago are still...
Yes. The one who said it was another lady?
No, him was 90%.
There's another lady you said.
Even her, she said 90%.
Okay.
Yes. The others were saying their turnover is 90%. Only 10% of the people they start with in January are still with them in December.
But I guess the whole, and just to brief the audience, we tend to have breakfasts that is very specific to industries, just to kind of have a way of enlightening or educating the public.
But also for us to get to understand the reality on the ground.
That's on one side for us.
Yes.
But for them, is to get to know best practices within their industry. So we tend to have, and the key really there is to show you how to grow with a focus on mergers and acquisitions. And then we have panelists who focus on other things. So like we have a lawyer who speaks about the legal side and what you can do legally within your industry. And then we usually have also branding as well, on how to build a brand, because the whole idea of the whole breakfast is to do growth. So you have cater to the branding, cater to the legal, and then the financial side, which is mergers and acquisitions, and specifically also starting with valuation.
You forgot operations.
Operations, yes.
We always have.
Yes, someone.
Yes.
Okay, yes.
So we always have four
So over the last year, we've had 4. 2 last year, 2 this year. No, 3 this year.
3 this year, 1 last year.
Yeah, 1 last year. So 2 are for schools, 1 was for healthcare facilities, and then recently we did for restaurants.
Yes.
And so that's usually why we hold it. And so some of the insights we're sharing now was from the latest one for the restaurants. But of course, we've also gained insights from others.
Yeah.
For example, for the schools, we realized that TSC is still a very powerful. The Teacher Service Commission is still a very powerful
entity,
stakeholder.
Yes.
Even if you're running your own private school, you cannot say TSC.
I once told you I made enemies with some private school owners when I told them they run public schools using private resources.
There you go.
Yes. So there's nothing like a private school because all your teachers must be TSC
certified,
registered.
Yes.
Yes.
And you ask for that number.
If they find out you have a teacher who does not have the TSC number.
Who is if they?
TSC. All teachers must be, for you to be allowed into a classroom, you must have a TSC number.
Yeah. So we were finding out that sometimes TSC picks up the phone and calls the teachers and say, listen, we have a position for you in public school, and they leave the private.
Yes.
And they go to the public, which causes a bit of turnover, especially for the best teachers.
The question becomes, why would a teacher leave a private school to go to a public school?
Yeah, I mean, they say it's because of longevity.
There's career progression.
Yeah, and then you'll not touch me till 60.
There's security of employment.
Yes.
And it's always been the dream of most teachers to teach in certain public schools.
Because they can do other things also.
No. If you're sitting in Maseno, what else will you do? You're forgetting that all teachers are not in Nairobi.
Yes.
Yes. You're in Maseno. You're in Isebania. You're in Garsen. What else will you do apart from go and eat mangoes?
That's what I'm asking.
No, that's a lie. That's a lie that private school owners keep telling themselves.
What?
That it's because the teacher wants to go and do other things. No. You're sitting with a single school. What's the maximum progression?
For the principal in a public school?
No, for a teacher in a private school.
Okay.
What are my growth?
No, but why are you discounting what they say is that they'll do something else, which is most cases maybe true.
Most of the time is that there is a chance for progression.
And doing something else.
No, that I think we need to stop that deception. The fact is simply, if I'm in a public school, I am likely to get promoted to a principal, I think there's a new one called, I think it's a chief principal. So there's now a principal who manages other principals. Yes. I called mine, the one, because I sit on the board of Upper Hill School. And I remember I called him principal and I was corrected. Yes, no, he's a chief principal. Yes. So those are the things that we take for granted. The other thing is also that I know that I'm not answerable to an individual. I'm answerable to an institution. So when you're looking at your private school, is it an individual run business or is it a process and institutional organization whereby I know you can't wake up in the morning because you saw me driving faster than you and we get to school, then you fire me.
You're talking of government.
No, government that will never happen.
Yeah, you're saying the way you're putting it institutional, you're talking as if it's government.
But government is institutionalized.
Okay. Anyway, we are going for a short break. This is SME Unleashed. My name is Dr. Edwin Obonyo from Strathmore Center for Value Investing.
And I'm Robert Yawe from Strathmore Institute.
Last Friday, people gained a lot on how to at least make their business better. But after that, the all main question they ask is what next?
Yes.
That is usually They've gained so much insight that they don't know what to do next.
I believe we had the same with the school one, and we didn't go and we didn't ignore the question. Too many times we tend to just do events and they end there. So what we've done with the schools is we decided what next, and this will be one of our pilots. So what we are saying is we've already sensitized you on what could be the challenges you're having and what could be the solutions. But then if we leave you, we are not solving the problem. So next journey becomes what? Can we walk with you through the journey of turning the academic theories, as I was told recently, that we're just academics who sit here with ideals. We need to get on the ground. So how do we get on the ground? So with the one for schools, what we are doing is we've developed a program called Forge, which looks at how can we work with you for 9 months to implement best practices and see whether in the 9th month your organization will be much better and will have met best practices. But to begin this, we have a concept. We say, if your mindset is not right, it doesn't matter how much energy we put into a process. So we'll start off with a 3-day case-based, what do we call it? Workshop.
Live case. No, don't just say case.
Live case. What's the difference between a case and a live case?
Leave those to the academics.
You're the academic in the room, so what's...
Oh, anyway, that was a joke. I mean, the normal case study, usually, the question we ask or the dilemma in the case is because the activity has already been done. We are asking you about a decision of something that has already been done in the past. Then with live, it's live, meaning the decision has not been made. So you want to see how you think through the actual decision.
Okay.
Yeah. And in most cases, we don't even know the questions ourselves.
Yes.
We start asking it. We could have a direction to it, but you ask it depending on what you have there in the audience.
So the audience define the way forward?
In a way.
Okay.
In a way. So then it becomes live because now the questions you ask there. And then, but the premise is the same, meaning the actual case is the same for everyone.
Yes.
There's no different cases for everyone. So if, for example, if you're talking about the school,
yes,
there's a case study of a specific school, which they'll have to read. They have to understand what is happening within the school.
Okay.
But then now the dilemmas is still not
defined.
Articulated. Yes.
Okay.
And so you do it with the class. And interesting, this is something that can work once we set through it. And because what we've now come to realize is some of the banks we have managers who are specific for every industry. And this can help banks as well, because then some of the issues that they may be facing within those clients within specific industries can also come to a session like this to also, exchange ideas based on what they've seen.
Okay, fine. So I've been corrected. It's not just a case, it's a live case. Yes. The case shall be fully alive in class through the 3 days. And the whole idea is, can you take the 3 days away to think through the challenges of your business? And those who meet, now this will be almost an academic exercise, who meet the threshold of the right mindset, we then allow them to go into now the 9-month program. And we have clear deliverables over the 9 months. And the participants will need to give us almost, trying to find the word. It's almost an acceptance that they shall do what needs to be done to achieve those set objectives.
Buy-in.
Yeah, so we want total buy-in so that we know that you're fully bought in for the journey. So this should be interesting. And I think that's the natural, the steps we want to take from the breakfast. Actually, we normally would begin with a webinar. Then from a webinar to a breakfast. From the breakfast, now we'll most likely start doing the live case. Yeah. Then from the live case, we do the 9-month program. The whole idea is that we need to see success at the end of the tunnel. Yeah. There's too much. We've been training. People have received trainings for the last 30, 40 years. But as Edwin likes to say, is that the true test is the NSE. Are we seeing new listings?
Yeah. And of course, at the end of the 9 months, we will have you on the other side, and whoever wants to seek investment, whether it's be private equity, or if they want to be acquired, or they want to acquire, or if they're considering going to the NSE to list as well, then it will be easier.
Yes.
Because the idea also is to align all those requirements that they have on this other side to the whole journey within the 9 months. For example, we expect that within the 9 months, you have your board and you've had at least 2 board meetings.
Yes.
So that it becomes a routine even as you leave.
Yes.
Because then especially if you have independent, then you can't just leave them hanging. You have to keep on going on. And that will also help if they're trying to raise capital, which in most cases, sometimes they want to, they just don't know how to go about it. And that will really help. So over time, we're hoping at least once we do 1 or 2, we can even have in buying from the actual financiers to be in the room as part of the accelerator. So it literally gives them deal flow. Because of course, we know on the other side, one of the biggest problems is deal flow. And so that's what we are trying to do. So Robert has just articulated the journey thus far, which is the webinars and the breakfast. Sometimes they go, because sometimes the webinars have nothing to do with what we are doing in the breakfast. Yeah.
Yes. Again, we've been through. We're in a 2-year experimentation stage.
Yeah.
So SCVI is more acting like a startup.
Yeah.
So we are trying to find where are the challenges that need to be fixed.
To be fixed.
Instead of sitting here and assume that we are the authority on what are the challenges out there, we might be the authority on what might be the solutions, but we are clearly nowhere close when it comes to defining the problem. Yeah. And I think the last breakfast on restaurants taught us a lot.
Yeah.
I listened to the webinar we did, one of the webinars on valuation of businesses by Ocheche. There's a very interesting question, is why do we use, it's called Damodaran? Why do we use Damodaran to value Kenyan companies, and then we end up punishing the Kenyan company because it does not meet the dynamics of an American company?
Yeah.
Now, the only way we can stop using him is if we have enough listed companies from various sectors who give us quarterly full disclosure.
Yeah.
Yes. And basically, so this whole journey needs to start ending up in public disclosure. So you can imagine if we had 5 restaurants already listed on the NSE, then if I'm doing a valuation of a restaurant, I'm using
the restaurant
data, which is local. So we stop punishing it, because I'm told now restaurants in Kenya is 2 or 3 times revenue on valuation. Yet in the US, they are 15 to 30%, 30 times revenue. Why? People are still cooking food, eating, and getting paid.
And so what was the answer given?
Again, like we say, we learn from what we are told by the market.
Okay.
So with our relationship, which we are chasing after with the NSE, hopefully then now with all our programs, we can say, can we make sure that the NSE has all sectors represented? Do we have schools represented? Do we have healthcare represented? Do we have hotels represented? Do we have garages represented? Yeah. So once we populate it, now that question actually opened up my mind to why the US, it's so easy to get a valuation, because there's almost no sector
it's not there
that hasn't been listed.
It's actually, and that what that they're referring to is something that's called multiples valuation, where you kind of use an existing company multiples to get the valuation, to get your valuation, to get your restaurant's valuation or your school's valuation. So that is interesting. So to just give you again a background, we do webinars we've tried to do webinars once a month, but in most cases, sometimes it's once every 2 months. So far within Strathmore Center for Value Investing, we've done 4.
Yes.
So Robert and Dan started.
Yes.
Then we went to Mercy, which Mercy focused on psychology of investing. We had a record.
Yes.
Over 400 registrations. And I think around 200 attended. Then we had mine, which was on venture capital and private equity, just to understand the layout of the venture capital and private equity within Kenya now. And then lastly, we had John, who looked at valuation. So again, webinars as well, which is not really industry specific the way we have it with breakfast, but it's something we just kind of have to, again, disseminate information online. And one good thing we are realizing is that a lot of our alumni of the university are joining these webinars.
Yes.
In some cases, they form even 60% of the attendees, which shows us that people are keen to keep on learning even after finishing school. Because wherever they are, they may need the knowledge or they also need to be stimulated as well.
Also could just be that we meet the objectives of the university, which is to create lifelong learners.
Yeah, there's that. But for them to attend?
Yes, that's why they are lifelong learners. Lifelong learners will always look for new opportunities to learn. Yeah, so at 60%, I think our Vice Chancellor should be happy to know that we have documented evidence that we are creating lifelong learners.
And then, of course, thanks to the alumni office as well, which has been very supportive in this journey. So the next one we'll have is in October. So, of course, tune in to our social media pages or your WhatsApp, because it might get to you through WhatsApp on the one in October. Of course, details will come as we approach it. So that has been our journey on the webinars front. And then, of course, over the last 4 webinars, which we are now sharing on social media, we've gained a lot and we've seen a lot.
Yeah.
Of course, the one of particular interest is the one for investing, which is, while it's not directly to SMEs, it's because it's more of individuals, but we are also finding out that SMEs are coming back asking us to help teach their employees or train their employees on
psychology of investing.
On psychology of investing.
Yes, and that one was quite interesting when
they call it financial literacy.
No, I don't think we have a challenge with the literacy.
No, I'm saying the SME founders call it financial.
Yes, we need to tell them that it's not that. It's a psychology of it, and I think we shouldn't water down.
No, we are not.
What soon to be Dr. Kano's
thing.
Yes,
we're not watering down. I'm just saying that's what
I
they
liked
say.
is, there's once I keep repeating this. The statement by one of the panelists was his MBA thesis was on whether education has an impact
on how you invest.
And the scary reality was it does not, which therefore means financial literacy is not a classroom issue. It's a mindset issue.
Yeah, 100% said. So, there's no but this is also, it cuts across in a lot of areas as well. Even in financial markets across the globe, usually they ask a financial analyst together with a normal guy in the street, and they ask, project, what do you think will happen to this stock? The answer is usually half 50-50.
Yeah.
On both sides. Basically, they're saying, in the long term, we are all the same.
Yes, like I say, when you take the buses to go and buy pieces of land in the middle of nowhere, you will have a graduate with a PhD, and on the other end, you'll have some guy who sells charcoal on a roadside somewhere, all of them going to look for a 50 by 100 piece of land. So we need to understand the psychology of these decisions.
Psychology, yeah.
Yes.
So that is also something that we're also having a discussion with, which is how to help the members or the employees of SMEs on the financial wellness path. Because, of course, if they're doing okay, then they'll perform better. I mean, that's what we are driving at. And then we also talked about the venture capital, which I was the one who was leading, and it was just basically to give a dispensation or give a guide on where we are at as of 2025. And it was interesting because we had it was a very heavy and goods panel. Especially we even had a lady who was, I think was in Mauritius. She joined us not even from Kenya, even though the PE firm is here.
Yes, it's a global PE fund.
Yes.
For me, the takeaway from that one was it takes a while to make a business investor ready.
Yeah.
But the minute it's investor ready, investors literally climb over each other.
Climb over each other.
Yes.
Yes.
I think we're told with the Java one, which was on the third investor.
Yeah.
But it took Java almost 12 years to become investor ready.
Yeah.
That's when the first PE came in, and they're now on the third. Yes. So the journey of becoming investor ready is not easy. And we have decided we'll take the challenge.
And then we need Java to get onto the NSE. Those are my opinions.
The opportunity arose, but the question becomes, chances are there's still too much value within.
But in the business daily, for a whole year, they kept on saying they're listing.
Yes, but there was a legal challenge. There was a tax issue about the previous transaction, whether it happened in Kenya or it happened overseas. So where was tax payable?
Oh, okay.
And I think there was no double taxation policy with the way the transaction happened. So it was treated as if it happened here. So that's why investors were avoiding it. But the good thing at least now we have an African, actually it's a second African-driven PE fund picking up, the one by Dangote.
Oh, it's the one that just bought.
It's the one that bought Java.
Okay.
So it's not that there's no funding available within Africa. So all this narrative of people wanting to go and look for financing overseas has been debunked by this one transaction. And the thing is, you can look at Java went through 3 PE funds, which tells you once you're good for the market, getting investors will not be a challenge. And you're talking of one PE fund exiting and making their 10, 15x to another PE fund that believes it can grow and extract more value from that business. So imagine Java still hasn't finished extracting value. And that's why they've not gone to the NSE.
No, they should. We need to own those shares.
But who would have bought it?
This I'm talking about as an individual.
Yeah, but I said, who should have done that? For me, our coffee farmers, instead of complaining about price fluctuations, should have put their money together. So put their money where their mouths are.
But someone has to arrange them.
But they already arranged.
CBK, Coffee Board of Kenya.
Yes.
Okay.
So to me, I think we're just trying to avoid.
This looks like we look for Coffee Board of Kenya there.
No, but the question is, what are they doing?
I have no idea.
Yeah, I told you I did the math. We pay more for coffee at Java than Americans pay at Starbucks. So this is a very rich economy. So for me, I don't know why Coffee Board are busy trying to send coffee overseas and Kenyans are willing to drink their own coffee at twice the price.
Okay.
Yes. And actually, yesterday, our meeting yesterday with a 300-year-old family. Remember, when they went into Ethiopia, he told us they had 8,000 shareholders to open a brewery.
Yeah.
So why is it that we can go and give money to some pyramid scheme, 3,000 of us giving it $1 million plus, but yet the same 3,000 people can't come together and do a clean transaction like pre-IPO Java, then list it and extract your value?
So we need to look for CBK and advise them.
But Nini has gone for now. So we need to look at who else is coming to the market.
Who has gone for now?
See, Java now has been bought. So until we can...
No, but they can always buy it from him.
So we get together to give him an offer.
Yeah. Nothing has stopped him.
So Coffee Board, if you're
listening,
and you need a transaction advisor.
Okay. You're going for our final break. This is Edwin Obonyo, PhD. I've changed it now. From Strathmore Center for Value Investing.
It's just PhDs we don't understand. It's doctor.
Yes. Just say, we have finished. Say yours as you go for the break.
Robert Yawe from Strathmore Institute.
Okay, this is the final segment. Be shorter than the previous ones. This is SME Unleashed. My name is Dr. Edwin Obonyo.
And I'm Robert Yawe from Strathmore Institute.
Yeah, from Strathmore Center for Value Investing. Forgive me for that. So the last thing is we are going to talk about the COMA program. We had graduation.
Yay!
A week or two ago.
Cohort 2 and 3.
Yeah, 2 and 3.
Yes.
COMA again. We've been speaking through it or for it or about it in our previous episodes. It's a mindset program in collaboration with Absa Bank, in which we train the Absa customers for around 8 weeks, no, 10 weeks now, because we've added one or two things.
This is Absa Club, Business Club members.
Absa Business Club members.
Yes.
And the idea is it's more in-depth than the breakfast. The breakfast is usually just to highlight, but for the training, we go deeper. So we have it once every week on Thursdays, 8:30 to 12. And we had our course 2 and 3 graduate. So we had wonderful photos taken.
Our graduate.
Of our graduates. And we thank our partners for being here as well. The Absa Bank management team, in charge of business banking, for gracing us during the event. But we are also having cohort 4.
Loading.
Open. For those who want to apply, please apply.
So how do they apply?
So we have. They
just need to send an email. That should be faster.
So there's the email, which is scvi@strathmore.edu. But also you can reach out to Absa Business Club. They can also direct you to the COMA.
And actually, if you're an Absa business account holder, talk to your RM.
Yeah, talk to your RM as well.
Yes, they should be able to guide you.
There you go. Yes. So we are also in the training side, as much as we do events as well, so that people don't forget. And once we do the training, the idea also as well as what we talked about previously is to get them also into the accelerator, into the 9-month accelerator as well. Because also one thing we found out over the 3 months, 3 cohorts training is it is easy to go back and not effect.
Yeah, the changes. It's a going back to what you're already doing is a low-hanging fruit. Yes.
Yeah. And so we're also trying to find a way of helping founders.
No, working together. I think we need to be careful. We're not really helping.
Yes.
We're working together. It's a partnership.
Collaboration.
Okay. Collaboration. Fine.
Yes. So out of all the cohorts, we tried to derive insights. So we are trying to write all those insights down. So hopefully we'll have something written down and we can share to the public as well, for those who have not been to our training program. Isn't it?
Yes. I think in addition to it, the whole COMA again came from, we could call it internal research, looking at what programs have been run and what was the impact like, and which is the core activity of institution of higher learning. It's really research, but then also to turn that research into actionable outputs instead of just leaving it as a document on a shelf.
Yeah.
So that's where this journey goes. And what we realized was we needed to get the owners of SME businesses to change their thinking. That's why we call it a mindset issue. So the first 2 sessions are about, are you aligned mentally for a business that is not dependent on you? If you're 100% want the business to be dependent on you, then really the program can't help you. So you must have made the realization that the business is draining you and you need to find a way to get back your time. And which is why we tell the participants, even after the 9 weeks, keep the Thursday to yourself to work on the business, not in the business. And I believe from when we look at some of the other cohorts, most of them have agreed, yes, that day away helps a lot. Because then you get to also realize that within your organization, you have people who are capable and are competent to run the business. But you need to give them a chance to do it without always hovering over them. So usually by the time we get to the 4th week, The staff already also appreciate the fact that you're usually not available on the Thursday. So decisions will have to be made on the ground. Now it is for you to then go back on the Friday and recognize whatever progress you see in your people. So we're not asking you to fire all your staff or hire someone else. At times, all you need to do is to recognize and promote somebody who has shown initiative, because they're the best person for you. They already know your culture as a business. They know you as a person. They know they can work with you. They most likely have shown loyalty because they've most likely been with you 5 years, 10 years. So you as a founder need to appreciate and accept that you are the one who defines the ceiling of the business. And that's what the program is about. So, and also part of it is after the program, we also get our students to come in and do evaluation of your business. 90% of the attendees have never had evaluation done of their business for them and not evaluation done for a bank. Because 90% of you have an asset valuation when you're going to borrow money. And the person who wants to lend you needs evaluation to know whether they can liquidate you and recover their money. But you need to know if somebody walked in to buy your business, what would they offer you? What is your business worth? And these are some of the things that we take for granted. But if the founder does not know the value of their business, then most of the times during mergers and acquisitions, they'll most likely get a raw deal, because the investor will discount a lot of things, and if you don't have a way to defend. And that's why every time you hear there's a buyout,
and just
the founder is always crying, I was shortchanged.
And just to add to that, the valuation is not static.
Yes.
Meaning, if you're valued 3 months ago, doesn't mean that's the value you are at today.
Yes.
So even as the students work on the document, we always advise and say, this is, first of all, they'll give you just a ballpark figure. That doesn't mean that's the figure. And then also it's not static. So you can't say 6 months later
that value is, because your business is a living organism.
Yes. So either it goes up or it comes down.
Yes.
So that is something that, you know, we are trying to do as part of the center to kind of help the SMEs do it. And so one thing we will try and do is we'll open it up to the public as well, slowly by slowly, with a form or whatever. We see if there'll be people who are keen on doing it for the center, because the center can actually try and help you get the value of your current business. So that's what we've been working on the last 2 years.
2.5.
Of course, there's a team behind us, faculty, administrators, and of course partners, for example, ABSA, who have really helped the center build up to where we are.
Yes.
Together, we also work with Raymond in charge of the family business. That's why he's part and parcel of this podcast, because some of the issues cascade both sides. Family business issues when it comes to operations, for example, or human resource, on top of the layers of family succession and how to deal with sale or exit if maybe the family member doesn't want to be part and parcel. So that's pretty much it from my end. Robert, you want to add something?
No, I think I'm fine. I think it's been an interesting journey.
Yeah.
And I believe it'll get even more interesting
as we move. Because there's room and opportunity. I think. And we're learning as well.
And the learnings. And I think it's essential that academia plays its role in industry.
Yes. So this is SME Unleashed. My name is Dr. Edwin Obonyo from Strathmore Center of Value Investing.
And I'm Robert Yawe from Strathmore Institute.
Thank you for tuning in to this episode. See you soon.
Kwaherini.